The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Monday edition, July the 16th, halfway through the month. And of the Tiger Technicians Hour, 877-927-6648. Of course, the same number to call as you had if you had called the Tom and Steve show, just the one before this, and Steve's show starting at 9 o'clock. We've got programming 9 o'clock till 6. It's just incredible. Now we've filled up that time. And even more incredible is how time flies. Here we are over halfway through the year. And the Dow is holding above the 12,500, 12,400 area, which has kind of been one of the places we've been looking at for quite about a year now, I think. Most importantly, let me just go through what I'm considering here. I still think that if you're looking at certain stocks that either you've been short, you have been shorting, and that have worked for you, that any rallies, any counter-trend rallies in this particular phase are worthwhile considering reshorting. I think that the stocks that have held extremely well, the ones that are near all-time highs, the ones that have been going up instead of down in the last week, those are the ones you can focus on. There are a lot of IPOs that seem to have now found some strength and have formed pretty nice bases, which might be kind of counter-trend moves here to the general market. Most importantly, what I've been talking about for a long, long time has been the VIX, the volatility index. It is the volatility index. It's New York Stock Exchange, but it's based on the futures contract. And essentially, I look at it very simply. If it goes above 20, I have different levels over the years that I've used. They make themselves apparent. I don't go around looking for the number. The number just pops out and says, I'm the number, use me. And in this case, I've said 20 for quite a long time. Underneath 20, there is buying pressure. I'm going to talk about this in a moment because it's really important with the VIX at 16.87. In the 20s, I believe there's enough selling pressure to push the market down quite substantially. However, at 16.87, I would have expected that the Dow would be closer to the 12,950, 13,050 area. In other words, there have been a number of factors that have said Dow, S&P, Qs, IWM, New York Stock Exchange, with the kind of buying pressure that we should be seeing, my interpretation, based on the volatility index in the teens, you should all be approaching the recent highs and breaking them. That immediately conjures up a picture in my mind of wheel spinning. What is wheel spinning? Well, for those of us who live in the Northeast or anywhere, Midwest or wherever it is that you get snow, you know exactly what wheel spinning is. You put your foot on the accelerator and the wheel spins, but you go nowhere. In fact, you can even go backwards. Or you're on the sand. And the wheels are spinning because you're on sand. You're not going anywhere. In fact, you're going down instead of going forward. I consider that a heads up, a yellow light to say, okay, keep that in mind, that the market has held up very well, but it hasn't gone as high as it should in this area. When the VIX has been in this area before, there's some really powerful moves, as opposed to that single move that we had on Friday, which was a great move, over 200 points in the Dow, 20 points in the S&P. You know, great moves, but we need to see something a little bit different. We need to see follow through. Hey, wait a minute. Talking about that, what about my Dow quartet? You know, I call it an index. Of course, it's not an index, but it's GE. GE is acting. This is not great action. A peak C minus. It fails. It's got the ChapmanWave stalk leg formation of the weekly chart. trading at 19.58, had a very powerful move up to the 1950 20.36 area that made an oval pattern with 20.36 being the high, and it broke the low just momentarily underneath the oval formation by going to 18.02 the week of the 8th of June, and then it ran up and went to a new high, a recovery high that is, at 20.84 4 weeks ago, and now it's pulled back, and that's the body going to the neck, the head, and now it's the beak, which it says if GE, it hasn't done it yet, but if GE starts to break underneath 19, that's really not a great sign, and certainly not on the daily or the weekly chart. The monthly chart is still holding in pretty well. Can't complain. It's there. It hasn't gone very far, but it's in a sideways consolidation. So the upside needs to break 20.30, and the downside must hold, cannot break underneath 19. Wait a minute. IBM, which has been one of the absolute stellar performers right up until it hit 210.89 a few months ago, and has now pulled back, and it's underneath the 9-period exponential moving average in the monthly chart for the very first time, certainly the very first time at this deepness under the 9-period moving average intra-month in a long time. But since it broke out back in April of 2009, that 9-period exponential moving average has just been an absolutely phenomenal. It has literally walked the 9 EMA. That's an expression I use, and I talk about that in my webinars on the moving averages. Wait a minute. The monthly chart, the weekly chart broke and closed last week underneath the left side low bar. That's a negative. And the MACD and stochastic are negative. That says that IBM could bounce, but it probably cannot take out the previous high, which would be 197.20 in the weekly chart, the week of the 6th of July. But it says, you know what, it can try to hit 191, 192. That would be the 9-period exponential moving average resistance. So we've got so far two of my Dow Quartet, two stocks that are not that great. Triple M, done much better. Triple M is making a high-level consolidation. The daily chart held the 9-period exponential moving average. Under these conditions, it's holding very well, but I would, if Triple M is going to be a leader now, take over from UTX, the next stock, which is really my key, it's my pilot light indicator. It needs to break. It's at 88.22 right now. It needs to get to 89.83 to break above the previous high on the 10th of July, and try to tackle the high, which was 89.95, and that would be very important. If Triple M breaks down under 86 in this week, in fact, that'll be very negative. So far, I think it's doing very nicely. It's holding. So UTX, my pilot light indicator in the Dow Quartet, making an H pattern in the monthly chart, had a peak F top at 91.83 back in July of last year. That's a year ago. It spent a year consolidating, and it's just basically been in a trading range between, say, 69 and 88. So it's just stuck in a trading range. So that says to me, the key indicators I'm looking at weekly is holding the 9-period exponential moving average, has the potential with this candle to break above and then come back and retest, or break below and retest. So this is in a trading range, but it's not leading. In fact, what it's doing is saying, I'm showing tremendous weakness, so I'm a little concerned. But that volatility index, I'm going to stick with that. It's been a great purveyor of news and information for me. It's pulling back to 16.67. I have to consider that's showing internal buying pressure. I'm keeping it as simple as possible. The Dow is down 34 at 12,742. S&P is down 3.5 at 1353. The comp index is down almost 2 at 2906. Gold is up only 2 at 1594. I just think gold is in this trading range, making lower highs and lower lows. I'm just keeping it as simple as possible. Silver's at 2735, down a fraction. Platinum's down 11 at 1419. Copper is giving back some of the gains from Friday at 3.49. That's down 1.25. Crude oil is just stuck at 87, and bonds are up a point now. Let's talk about this. So we've got the volatility index says, okay, there's buying pressure. You've got a counter trend thought process here, which says, the TLT broke to a new high. I have to call that leg D in the weekly now. You remember I had an alternate wave count, but I've said in the Chapman wave, keep it as simple as you can. When the technicals are strong and the price is moving higher, you don't have to say, oh my goodness, we're coming to a peak F, especially if it's a continuation of the previous peak, no matter how long ago. Just keep in mind you've got a parallel wave count. There's nothing to do. If you're long, you stay long, you raise your stop. If you're thinking of going short, you cannot go short until you get a clarification of the signal. Well, the monthly chart is just extended now in leg F/C. Technicals are very strong. And the weekly is saying, ha-ha, I've broken above the previous high of 130.38. This is the Lehman 20-year T-bond fund. And at the same time, that bar was supposed to indicate that rectangle formation, that the daily could make an internal buy mode in the Chapman wave. That is going from a trough to peak A, B, C, and then D. And when the price, or if the price gets to, at, or above the previous high, that is when an incredible amount of information is going to be imparted. You've got yourself the cup formation, so it could be a double top. You've got yourself a potential for a breakout formation because the technicals, the stochastics at 92%, and so far showing no sign of decline. In fact, it's increasing. And the MACD is steadily moving higher, and the histogram, those gray bars right over there, are very strong. I'm not going to fight this. What I'm going to say is the TLT at this particular point should not be up at new recovery highs, actually all-time highs. Wow. All-time highs. Bonds. At USP. I can't believe this. The bonds are holding above the up-channel resistance, which is now up-channel support. Holding above, this is the continuous contract, the 143.20, 20-30 seconds, 9-period exponential moving average, and 152 730 seconds hasn't broken above the 152 730 seconds. Let me just go to the contract itself because they are sometimes differing. Oh, well, that also hasn't broken to a new all-time high. But and neither is the weekly in the bond contract. That is the September contract. But it is in leg D underneath that previous. Oh, this is so fascinating. Let me just tell you my rules. In this particular formation, and you'll find it in my CD introduced in ChapmanWave methodology, what happens is you get an inside bar between like a flagpole with a flag formation, and now you've got in the shorter time frame, that's not the weekly, we're going to the daily, you've got yourself a leg ABCD, legs ABCD, and the 1, 2, 3. All right, and the 120-minute chart says, haven't as yet got a sell signal. So this is really amazing. You've got the Dow now only down 23. The S&P's unch. You've got the volatility index sliding. And what the heck's with the bonds? It's a safety factor. A safety factor? That means that people are paying 50% more for the bonds because they can close in 30 years at par, 100, and they're paying 150. Wow, this is interesting. 877-927-6648. Love to take your calls. We're going to talk about some other things in the IBD as well. We'll be right back after these very important messages. Basil Chapman.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about The Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive The Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on The Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're going to go to our callers within a few seconds. I just need to do this because I had a question about an email about it, and I said I would get to it as soon as possible. The CZ12, that is the corn December contract. You remember what I was saying? That when it broke out and went to D and then went to leg E, on the 9th in the ChapmanWave, I said I had a question about whether to short it, and I said I would not short it. I'd be very careful, just because there should be a pullback, and I would only take a little bit off right now. That's money management, but the core needs to be held because the weekly is extremely strong. Well, corn has just gone to a higher high today. It went to 778. And the technicals are still very strong. On the 120-minute chart, that is leg E, so we're getting close. Just a pullback, but until there's rain, I'm not sure how much the pullback would be. 714 would be the 9-period exponential moving average, and we were actually talking about corn, the ETF. Remember, I spent some time about it. That has just gone to a leg. I have to call this a leg F. I don't have. It's either a brand new A or an F, and I'm going to be conservative and call it an F. So that says, if you haven't taken anything off, I would definitely start taking a little bit off now, because it says from the chart formation that you want to keep a core based on the weekly, but money management says, just take off a little. You've got an extra bonus, take something off, because it is getting to the point where if it does pull back, it could very quickly fill in the Roman candle low of 40. This is corn, CORN, trading 49.42. It could very quickly go down to the 46s, or even the 44.81 low of the candle of the 11th. And that would just say you're in a trading range. That's something just to be aware of. And I don't have it. I've shown it to my subscribers. We don't have it as a trade, but I know that the people have asked me about it, or subscribers. So I've responded with the charts and what we're looking at. Let's go to Joe in Boston. Hi, Joe. How are you?
I'm well, Basil. How are you?
Very well. Thank you.
Good. You having a good summer?
You know, it's been a really nice summer, and I just have to admit that for all the years, I just loved the heat and the sweltering and everything. Mm-hmm. I'm kidding. I guess I'm getting a little older here, and I don't put up with the heat. Although, as long as I'm playing tennis, I can put up with the heat. But otherwise, just walking around, it's not as much fun as it used to be.
Good. Hey, I wanted to look at Wynn.
Okay, WYNN. This is, you're not looking at Wynn, the cable company. You're looking at Wynn Resource. Mm-hmm. Wynn Resource is trading at 96.92. It's up 72 cents. And my suspicion is you're looking for a bounce because it's retesting the left side low.
Yeah, it still looks incredibly bearish. Maybe about. I was going to monthly to go lower.
Yeah, see, there are two ways to look at this. On a really short-term basis, you can get a bounce because the risk-reward says, you retested the low, you closed above it last week. That is, folks, we're looking at Wynn Resorts trading at 96.97, up 75 cents. But it is the low of 95.82 on the 4th of that was June, had a bounce that went from that low of 95.82 to 107 round number, pulled back sharply, and then went above the 107 round number to 107.57 on the 21st of June, and then once again pulled back. But this time the pullback went 1, 2, 3, 4 troughs down. So you've got a parallel. Now, this is very interesting. If folks want to know about the Chapman wave, I talk about the overlapping waves on the upside. This is a great example. I need to just double. Yeah, this is a great example of an overlapping wave on the downside, which says that not only should you make, if you break below the trough C, that's the last one of 98.44, should it go sharply down, it should break the left side original low of C at 95.82 on the 4th, and it should go even lower, even if there's a bit of a bounce. So I'm with you. Now, let's look at something else. Where would the bounce go to? It could go to, it has really quick and sharp bounces. This thing is it could trade 7 points in a day very easily, even more, 12 points even. So I'm looking at this and I'm saying, this has got a nice up move today. It's gone above the candle of Friday. If it's going to move, if it closes above 97.70, that's the high of today, anytime this week, it could very quickly get to the 98 to 99, even 100 area. That's where I think it's going to stall. But what I'd be looking at is if the slow stochastic, which is at 13%, actually gets above 20% in any move that it has over the next 2 days to the upside, I'd have to wait just a tad longer and say, okay, now I need a little bit of evidence that the next turnaround is the one that's going to not only test the low of 95.10, oh, and it had another round number there, 95.10 on the 13th. Oh, I can make this very easy. If this closes above 97, then it should try for 98.50 to the 99.10 area, and then you've got to watch the resistance points. I'm going to take a little time during the break because I love you're right about it going down. So let's look what a bounce would be. Maybe rather than play the long side, I'll be right back with Joe in Boston looking at what results.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Dow's down 32. S&P's down $1.75. We are on with Joe in Boston. We're looking at Wynn Resorts. And Joe, are you going to use options, or are you going to actually do a position on this?
Yeah, I was probably going to do some options on it, but what I was thinking is I didn't know if longer term you thought this could make its way down to that 68 level.
Well,
or is that too far down?
No.
On the weekly. I was looking at the weekly.
Are you looking? Well, the very easy way to look at this is to say, is the chart, which had walked the 9-period exponential moving average beautifully, did a beautiful left side, right side price time match to the 160.05 area from July of whatever it was, August of 2008, to the high of 172.58. That was in July of last year. It's making lower lows and lower highs.
Right.
So, and the MACD and the stochastic, if anyone's looking at Tiger TV, the chart that I'm showing now, I've just expanded it. This is the monthly chart. You can see it's consistently gone to peak D, and then the last one was a peak F. And that F, if the technicals are fading, says be careful, because that could be a very serious pullback. And what's happened is it has pulled back from the 172 level down to the 95s. So far it's had a pretty darn good move. This is 60 points to the downside. Here's what I'm thinking. If you're going to use options, I would be looking out, certainly not at July. I'd be looking out at maybe September. And the September, the way I would look at it is, if it's able to rally into the 98, gee, I don't know if it's going to do that, but if it can get to 98, between 98 and 100.50, I would be looking for two positions. One is for an August position with the bias to the because I know you probably won't just go naked puts. Right. You'd be doing some kind of strategy.
Yeah.
My bias would be for August and September on the short side.
Right.
And the reason why I say that, because if it gets to the 98 to the 100.50 area, holds really well, you will see a big shrinkage in the premiums if it holds steady. And if it tries just once to get to like 101 to 102 and then fails and starts to come down, suddenly the MACD will start to expand again. And so far, the monthly chart will not change, the technicals will not change until there's at least a 15 to 20 point sustained move to the upside. I just don't see that happening now, but I am a little concerned. That's the reason why I'm not saying right now to do it. I say you need to wait, because you use the 200 period exponential moving average, right?
Right.
Okay, look at the weekly chart. If you're looking at Tiger TV, and there was a beautiful ChapmanWave flat base restart in the previous peak to 167.58 in the weekly chart. The rule of thumb is that goes to a lower low from the starting point, which is around about the 111 area, which it did. Then it has a counter trend bounce, which it did. It went to peak D. Then it pulls back, and the big test is this dreaded H pattern sitting on the 200 period exponential moving average. Joe, what would be the problem if it goes to 94 in the next 2 days? You might have missed the move, right?
Right.
So this is what I'm going to recommend. You can start just the smallest position if there's a failure, but it's Friday at 4 o'clock. I would not do it before then if you're looking at it on the downside without the pop-up. So if it pulls back and it closes any day below 95.10, you can start looking at it and saying, I think we're getting a failure of the 200 period exponential moving average. But even then, because that 200 period moving average is such a magnet and can become a propellant and a repellent, I would only start just a small position on the short side. So that's the way I'm looking at it, and I think you're absolutely correct in it making lower lows to come. But the actual position, the best position would be a counter trend rally of about, it's only 4.5, 5 points.
Yeah.
So that's my strategy.
Cool. If you get a chance before the end of the show, can you just do a quick and dirty on Pfizer, PFE?
Actually, no, I'll do it now because it's one of the stocks. It's very important. It's a Dow stock. I'd like to look at it. I want to look at both the positive and the negatives. Yeah. This fits. You're long this, right?
Well, yes.
Okay. So Pfizer, what I'm looking at now, PFE is the symbol. Pfizer Inc. and Merck and Pfizer have been fabulous Dow stocks on the upside. The pharmaceuticals, the biotechs have held beautifully. Right. This is trading at 22.95. There is an up channel, and that up channel says it's gone to, I have to call it a peak F for now. But if Pfizer breaks intra-month above 23.30, I'm calling that leg C. I have no choice but to call it leg C. There's still the if anyone's looking at this on Tiger TV, this is the monthly chart, and what you'd be looking at, you see the red lines and the green lines at the top. That's what I call the inside track. At the bottom, it's got it should be upside down. This is upside down. It should be red and green where there's support. But this, I'm not talking about that now because it's holding the 9 EMA. I like the action here because it's one of those stocks that's at this particular point market independent. And now what you want to see is a break above the level I spoke of, that's 23.30. That would be very positive. If Pfizer in July, I don't know if it can do it. It looks like it wants to. Right. But if it can crack above that doji candle in the monthly chart of October of 2007, above 25.71, not only would that give leadership, but that'll help the Dow on a certain number of points on the Dow to have some stability. I love the action right now. I would say I'm totally wrong about upside action if Pfizer breaks and closes under 21 in July. Yeah, so it's not far away.
There's your bifurcated market there. You got win in Pfizer at the opposite end.
Absolutely. I mean, this is what we're talking about. Even within sectors, we're seeing the same sort of thing. So I'm saying to folks, just do your homework. Forget about what you read. Forget about the news. Forget about everything else. If your stock looks good, stay with it. If it looks bad, stay with it on the short side. Hey, good picks.
All right, man. Thanks.
Thank you so much for calling. Joe in Boston. Now, Lou, I don't know if, Lou, you're out there, but twice now you've called me, and it was my error. I'm sorry. Both times it was late in the day, late in the session. I didn't get to your call. I know on Friday you had asked about IWM. I wanted to get to it. I'm going to do it right now. IWM, I'm talking about channels. Let me do it backwards. I'm going to talk about the monthly chart. There's a monthly chart that says it's made 153% gain when it goes to 86.82 back in May of last year. It pulls back exactly to the 200-period moving average of 63.76. This is the iShares Russell 2000 index. It's at 79.72, down 5 cents. And the monthly chart now, this is a very interesting thing. There are a number of charts that do this. This is one of, together with the cup and handle, not the cup and ladle, the cup and handle chart pattern. This is another one of my least favorite chart patterns. Only reason is that when you finally recognize it, it's about to turn course. And this is the symmetric triangle where the trend line down and the trend line up kind of meet at an apex, and you've got a doji candle here on IWM. All that happens is that eventually it suddenly breaks out the downtrend line, and everyone says, oh my God, it's going back to the old high. No, what happens is it just breaks out, and it fools you for a moment, then it comes right back in because that 9-period exponential moving average is so important. Same thing on the downside, except for one thing. The technicals are not good. So if the IWM at the end of July is even close to 72.94, that's 5 points away from here. That's quite far, but I'm giving you the parameters. That's going to say that's a failure pattern. IWM is going much lower. It's going to probably go into the 71 to 68 area quite quickly if it does that. If it hangs out to the top, that's this reading that says, be careful, because if it goes above 84.66, this is the monthly chart, it could very well try to get to the 86, 82 level. So it's not a favorite technique of mine using the trend lines like a triangle, sideways triangle. I would rather say the mechanics of the technicals in the monthly chart are very poor. Now let's go to the weekly chart. The weekly chart says, hey, I'm sitting on the 9-period exponential moving average. I'm doing very nicely. The MACD is right. The fast moving average is sitting on the slow-moving average. If it deflects lower by closing below last week's candle of 77.59, not good, because the MACD will deflect lower. Stochastics run up very nicely with the price, but it's not at 80%, it's at 62%. So the weight of evidence gives me the same outlook. I have to either, if you're long, you stay long and you use the stop that I just spoke about, or if you're short, you just don't want it to break. Actually, if you're short, you don't even want to get into the 80.66 area. It's a point higher. Now, this is very interesting because I've got in the weekly chart, let me expand this for those of you looking at Tiger TV, you'll see that there was an arch formation. This almost looks like a heart, like a heart. That if it starts to break down, the arch formation says the last peak of the week of the 20th of March at 84.66 has had a right shoulder pattern, but it's a right shoulder failure pattern. Once again, if this week it starts to break down, and then the stochastic MACD say, hey, be careful, because if it, in the next 3 weeks, if it takes out 75.42 is the level, but if it takes out 75, you've got that 200-period moving average of 71.71 as a target. All right, so that says at this particular point, I have to let the price tell me on both the monthly and the weekly, hey, wait a minute, here's the daily. Now look how beautiful these patterns. If you can learn how to draw these patterns, you see the 200-period moving average. Wow, it's a little messy here. Let me see if I can I'll expand it. There it is. You see this bluish, the mauve line? That's the 200-period moving average. And like a sine wave, it's gone below and above and above and then below. Then it hit it exactly. That was also the support level of the up channel inside track. Remember the ChapmanWave inside track? The green line says that's great if you can get into it and then bounce off it on the upside propellant line. It's terrible if you break under the red line and close under it. That would be at this particular point, that would be at about 77.30. See how the numbers keep coming up, the same numbers? But the upside says you're in an up channel. You're above the 9-period exponential moving average. If by the end of the day or tomorrow, the IWM takes out 80.09, if you were short, I would use that absolutely as a stop. a buy stop, even though you could make that dreaded H by failing at that particular point. Just risk reward says be careful. In fact, I'd even say to you, be careful if it takes out today's high by the end of the day on the IWM. But on the downside, if by Tuesday afternoon, Wednesday morning, the IWM closes under 79, let's call it 78.90. That'll say be careful because it could be a retest of that low. So what would I do if I had no position at this particular point? I'd have to stay with no position. Just for the moment. Why? Because even if it takes out the high of yesterday or Friday at 80.09, there is that H pattern that says it could happen because the stochastic's only at 59% and the MACD is almost like it's going to break, inflect lower or deflect higher. I don't know yet. So sometimes if you don't know, the best is just to wait for the evidence. My bias just because of the low volatility index, is to say, you know what, Lou, and Lou hasn't called, I'm just doing Lou, this is still for Friday and Thursday. Was it Thursday that I sat in for somebody? Or was it Wednesday? Or Wednesday. That's right, Thursday evening. I sat in for Tom. So those are my bias right now, based on the 120-minute chart, is that if it takes out 79.88, I would just nibble on the long side, and probably it's more out of curiosity than anything else. And I just have like the tightest stop ever. If you are long, Lou, you want to see a break above 80.09, you want it by later this afternoon or by 10:15 to 10:30 tomorrow morning. That's just the way I look at it. If you're long, I would make a stop. I would definitely make a stop just under 79, 78.90, because if it closes at that level, there's a good chance it's going to do some retesting of the 200 EMA and the 120-minute chart. All right, well, that was for Lou, who didn't ask anything today, but I know that he asked it on Friday. Now let's go to this, what I want to look at. Catamaran Core provides pharmacy benefit management services. Number one on IBD, CTRX. And I do all of the IBD stocks, so I wish there was just a way of showing them all the time. I can't. So it has made, I believe this is not only is it a top in the daily, it's trading at 93.34 at minus 153. At 104.04.79, it made a high on the 2nd of July the 2nd, and has pulled back really substantially since then. And the weekly chart is holding the 9 EMA, but I can just tell you this, the MACD and the technicals are turning around. The price at the level of the high on the 6th, the week of the 6th of July, the technicals were way lower than they were when it made peak D at 100.50 on the 20th of April. So I'm a little concerned. And my monthly chart is saying, not my monthly chart, the monthly chart, is saying that there's leg D in the monthly. I don't have anything technically negative in the price, other than the on-balance volume failed to make a new high, and when it turns down, you've got to be a little bit careful in the monthly chart. So I'm going to watch this closely, because if CTRX trading at 93.36 closes underneath 91, it's not far away, but if it closes under 91 Friday at 4 o'clock, I'm looking at this and I'm saying, this could be a quick slide to 80. And this is the number one stock, GNC. This is GNC Holdings. This is health. What is it? What are these things called? Franchises, nutrition stores worldwide. Hey, I think this has also made a peak C1, C2 top. It's leg C in the monthly, so that's still very strong monthly-wise. But the weekly says, be careful, because there could be a sideways consolidation for a little while. I think this will still go higher, but on a shorter term, like the other, I've got a bit of a sell signal here. So it's very interesting that we've got my Dow quartet and these IBD stocks. I'll be right back. 877-927-6648.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi everyone, Basil Chapman. My service is the opening call. It's just a very detailed daily report. I explain what we're looking at, the different indices, the parameters to look for. I show the techniques to use. I show the E-minis. I show charts like this every week. I didn't show it today because I wanted to see what happened today, and I'll show it tomorrow. This is the TYX. This is the 30-year, what I call my triple yield chart. It has the 30-year T-bond yield, that's the white one. The 10-year, that's the yellow T-note, and the 5-year T-note, that's the cyan, light blue color. Now look at this. The 30-year is about to test 25.10. That's 2.51%. The low of June, the first week of June. Today's low so far is, today's low is 25.17. We're 8 ticks away from making a new, not recovery low, what would you call it? An unrecovery low. A new unrecovery low. And the 10-year is gone, the 1440 back in the week of the 1st of June. And today's low is, let's just see what it is, 1442. 3 cents away from making a new unrecovery low. And the 5-year is way lower than the 6% low. It's gone to 5.79. That's 5.79%. Now, remember I talked about the Japanization of our bond yields? And the portfolio that we have in my opening call kind of reflects what I'm thinking. We had two longs. We now got one long. I have shorts, adding to the shorts. My bias is at this particular point, even though the volatility index is down low in the 16% area, 16.86. Something's wrong with this picture. I haven't put my foot on it more. I haven't pinpointed it. Yeah, talking about feet, I was thinking, how do I explain this, the market right now? I was speaking to someone yesterday, and he said, wait, what's going on? I said, you just got to keep it as simple as possible. At this point, I've got one foot on the accelerator, one foot on the brake, and I wouldn't even say accelerator per se. I'm not aggressively trying to go for longs, but I'm seeing positions that might work out quite well. But I just happen to see more shorts, even though I'm pretty much a half full rather than looking at a half empty kind of guy. I'm just, for weeks and weeks, I've been seeing more shorts than longs, and the shorts seem to be working out. That's all I can say. The price points are really important to watch. If the T-bonds are moving higher and rates are going lower at the same time as the market is trying to rally, that's unusual. Look at the UUP. It's just stuck. It has gone to a leg E in the weekly chart. This is the chart you're looking at, folks. This is what I show my subscribers as well. This is the UUP, which is the dollar index. It's not as satisfactory as it should be. It's the best you've got. It's the Power Shares DB US Bull, dollar bull, and it still has not broken out above 23.52. I think when it does that, it's going to go really quickly above that. But so far, leg E up. And look, gold, the GLD at 154.57, up 45, has not broken down yet. But everything about it points, well, I'm going to have to extend this out. I don't know if in the next, August the 17th, that's like, 3 weeks or something, 4 weeks. If we can drop from this level down to 140, what is that? 128? No, I don't think so. I'm going to have to extend this out. Same with the dollar. But I'm watching it, and I'm saying the gold has not been able to rise. It's making lower highs and lower lows. So if the GLD takes out 140.48 at any point, if it closes in the 147 or below 147, I have to consider that gold is still further to go on the downside and that the dollar will break out. So we've got a real mixed picture here. If you're looking at the XLF, I was asked about the XLF. The XLF is doing quite nicely here. If the XLF takes out 14.85, I think that will be a stimulus for the move in the Dow to move higher. But it needs to do that, and it needs to do that real soon. If the XLF breaks under 1440, it's at 1467, I'd say be kind of careful. All right, folks, that's it for me. Stay tuned for Larry Pesavento. Should be a great show as always, and all the other people here at TFN, and I'll be back on Wednesday.
Are you looking for